Okay, so what is going on with the market today? It feels like we're watching two completely different movies at the same time. In one, you've got this insane AI powered tech rally just soaring. And in the other, the crypto market is in an absolute freefall, just bleeding billions of dollars. How can these two worlds, which used to be so connected, be heading in complete opposite directions? Let's get into it.
And yeah, I'm not kidding when I say split personality. This isn't just a small blip on the radar. We are watching a major decoupling happen in real time. Capital is literally flooding out of crypto and pouring straight into AI. And that divergence tells us a whole lot about where the big money thinks the future is really heading.
And this really gets to the heart of it, right? You can see the mood right here. The AI rally is all about real, tangible progress. You can see a clear path to how these companies are going to make money. But the crypto plunge, that's being driven by fear, uncertainty, and a whole lot of doubt. So to really get what's happening, we've got to dig into what's powering each of these trends.
So, at the center of this whole AI thing is this massive global construction project. We're not just creating cool new software, we're building the physical plumbing, the actual backbone of artificial intelligence. And while the companies that are selling the shovels in this digital gold rush are making out like bandits.
I mean, look at the NASDAQ today. It's a pretty clear sign that the AI rally has some serious legs. But here's the thing you gotta understand. This isn't some broad rally where everything's going up. Nope. It's a super focused bet on just a handful of companies that are literally building the future of AI. And Supermicro is a perfect example. A 12% jump this week. That just screams that the demand for AI hardware is absolutely insatiable. This isn't about some abstract idea. It's about the very real, very tangible need for the powerful servers that make this whole revolution run. And you can bet investors are paying close attention.
So, who are the big players here? Well, it's pretty simple. You've got Nvidia, which just got another upgrade, leading the pack with their AI chips. Then you've got Supermicro, which is just crushing it in the server space. And what's fueling all of this? It's the explosion in demand for training these large language models. The LLMs, the brains behind things like ChatGPT. Everybody from tiny startups to entire governments wants in. This is where the hype gets very, very real. And we are not just talking about a short-term pop here. This is a fundamental shift in the entire global economy. The semiconductor market is on a trajectory to be a trillion-dollar industry by 2027, and AI is the rocket fuel getting it there. We're literally watching a new economic era being born. This whole AI boom, it's not just a Silicon Valley thing anymore, not by a long shot. This is a global race. We're seeing countries all over the world making a synchronized bet on building the infrastructure of the future. And the stakes? They're incredibly high. I mean, just look at China. They're dropping nearly $100 billion on AI next year alone. That tells you everything you need to know about their ambition. See, this isn't just about economic growth for them. It's about geopolitical power. The race for AI dominance is on, and it is heating up fast. And yeah, this quote just nails it. This isn't just about companies competing anymore. It's become a battle for technological supremacy between nations. You could almost call it a new kind of Cold War. And the chipmakers? They're right there on the front lines. Okay, so while the AI party is raging, there's another part of the tech world that's, well, it's a total mess. The crypto market, which was the darling of investors not too long ago, is now staring down a massive crisis of confidence. And wow, the contrast is just jarring. The numbers are just brutal. We're talking about $370 billion gone, wiped out in just 1 month. That is a staggering amount of money that has just evaporated. It's a painful reminder of just how volatile this space can be. So why the crash? Well, it's kind of a perfect storm, really. You've got big money pulling out of those crypto ETFs. You've got everybody getting nervous and selling off risky assets before earnings season kicks off. And maybe most importantly, the everyday retail investors who fueled the last big boom, they're just not showing up. It really seems like the party's over, at least for now. And if you want to see what this feels like, look no further than the Crypto Fear and Green Index. It's basically a mood ring for the market. And right now, it is flashing a giant red light that says fear. We're sitting at a 33. This isn't just a slight dip. It's a sign of some deep pessimism that could stick around for a while. But hold on, let's not get carried away with the AI rally just yet, because if you look just beneath the surface, there are some serious warning signs blinking. The whole tech sector is kind of walking a tightrope, and one wrong move could send the whole thing crashing down.
Take Tesla. Their earnings report is coming up, and it's not just a test for Tesla. It's like a final exam for the entire high-growth tech sector. If those recent price cuts have really squeezed their profits, it could send a serious chill through the whole market and make people question if this rally is built to last. Then you've got Netflix. They're at a real crossroads, right? They've made some huge bets on their cheaper, ad-supported plan and their big push into live sports. But the market is still tapping its foot, waiting to see if those bets are actually going to pay off. This earnings report is going to be a massive test of their new gameplay. And finally, Intel. Their earnings could be the moment that makes or breaks the entire semiconductor industry. As one of the biggest players in the AI game, their performance is going to send ripples everywhere. It'll either pour more gas on the rally or throw a whole lot of cold water on it. The stakes for all three of these reports are just unbelievably high. Okay, let's talk about the bond market for a second. Think of it like the weather forecast for the economy. When bond yields are falling, like they are now, it's basically a perfect sunny day for tech stocks. It's cheaper for them to borrow money, and all the money they make overseas is suddenly worth more. But, as we're about to see, there might be a storm cloud brewing. And here it is. That's the storm cloud. The bond market is sending a really clear signal. Don't get too comfortable. Even though those lower yields are helping tech right now, they're also a sign that big-time traders think the wider economy could be heading for trouble. So yeah, this whole tech rally might just be a bright spot in a pretty gloomy economic forecast. So with all these mixed messages flying around, it's super easy to feel lost. But there are a few key things you can watch that'll help you cut through the noise and figure out what's really happening. Here's what you need to keep your eyes on. All right, so these are the big ones. First, how the market reacts to the Tesla and Netflix earnings. That's going to tell you a lot about the health of growth stocks in general. Keep an eye on Nvidia's stock price. It's basically the canary in the coal mine for the whole AI rally. For crypto, the big question is whether Bitcoin can hold that $105,000 line. And then, of course, you've got the broader economic data like jobless claims, which will give us a better picture of the real economy. So here's the billion-dollar or maybe trillion-dollar question. The AI boom is undeniably here, but is it a real, sustainable boom or just another speculative bubble waiting to pop? These next few earnings reports are going to be a massive test. Will the numbers back up all the hype, or will they expose the cracks in the foundation? The answer is going to define this market for a long, long time.